Hey, this is Tom, and this is an urgent, important warning to every single Palantir shareholder out there. Listen to me, this is critical. Now look, it's fun to be a Palantir shareholder right now. The stock is up 200% year to date. It's up yesterday 10%. It's up today 10%. It just almost scratched that $20 mark for the first time in God knows how long. I know it's a lot of fun. But hold on a second. Let's talk about what's going on. So this is going to be a very volatile week for Palantir. We have about 7 days leading up to the earnings. And those 7 days are going to be extremely volatile, messy, and absolutely noisy. Every week that leads to Palantir earnings is incredibly crazy. Now you're seeing the flip side of that craziness. It could be negative in the same breath. Don't forget that. Volatility means up or down. No stock ever just goes up endlessly. It doesn't happen. Now look, the stock did run up like crazy over the past 2 days. It's running up like crazy year to date, and I get it. In fact, I've posted on our Patreon page that the stock can run up from 19 to 21 in the short term. A prediction that I've hit almost entirely perfectly so far. We'll see how this plays out. And a very similar prediction to the one I did from 16 to 18. But that's just short-term speculation. I don't trade the stock. I'm a long-term holder, so this is what I care about honestly. Now, here's the story here. I know that a lot of you are scared. I get it. The stock just ran up 200%, and you fear that a correction may happen. If the earnings are not perfect, like what we've seen today from SoFi. Today, SoFi blew the earnings out of the water. Incredible earnings in every single parameter possible. If Palantir does not deliver a home run out of the park earnings like SoFi just did a few moments ago, this stock has a good chance of correcting, pulling back, especially after a 200% year-to-date run. No stock goes up endlessly without correcting. It does not happen. And currently, because Palantir is at a 200% year-to-date spike, it's on the hot seat. If the earnings are not perfect, if we're not going to get a home run, the stock has a good chance of pulling back. So what needs to happen for the stock to keep running? Well, it needs to deliver perfection. A beat on earnings, a beat on top and bottom line, and great guidance going forward. If Palantir delivers on all of these, it will keep running up. And it's going to accelerate the process for Palantir moving towards the gate where I think it actually should be. I think Palantir is still undervalued. But the pace at which it's going to catch its valuation depends on how good these earnings are. But here's the crazy part. I don't think you should be worried about a correction or a pullback at all. Number one, the extent of the pullback is going to be very limited compared to what we've seen during the drought of 2022. You see, Palantir is no longer the same stock it was when it was trading at $6 and $7 and $8. The fact is, yes, it did run up by 200% year to date, but it's still a long ways away from its real valuation, which should be much higher. It is still undervalued, and it's still far, far away from the all-time highs. So the fact of the matter is, Palantir isn't in the bubble, despite what some bears want you to think. Number two, if a pullback does happen, if we get a correction on Palantir, that is a good thing for long-term investors. I'm not talking about traders, swing traders, day traders, options traders, none of that. For long-term buy and hold Palantir heads like me, a pullback is an opportunity. I'll explain. A dip in the share price allows us to double down into our dollar cost average into the stock. We have limited capacity in which we can dollar cost average every single time. We don't have endless money. So whenever a stock like this, a stock that we consider to be the holy grail in our portfolio, at least for myself, and again, this isn't financial advice, I'm not telling you to buy or sell Palantir, it's just my opinion. For me, Palantir is the holy grail. So when my holy grail goes down in price all of a sudden and allows me a second and third and fourth dip to buy some more at a reduced price, this excites me. I get to double down when times are bad. Look, you have to just remember how things used to be. In 2021, when I was saying Palantir is a $1 trillion company, everybody was calling me a genius. The stock ran up from 18 to 35, and everybody was saying, well, Tom, you nailed it. In 2022, people were saying, well, Tom, you're an idiot. The stock went down from 35 to $6. Tom, you have no idea what you're talking about. 2023, comes in, and now I'm a genius again. It went up from $6 to $20. Again, Tom, you knew it. You called it. Now, these bandwagon fans that come in and, cheer me now and then they hate on me when the stock drops, I could not care less about. Sorry, guys. No offense. I just don't care. The only people I care to serve is long-term Palantir investors with high conviction in this stock. That's the only thing I care about. I don't care about the people who are running around like headless chickens trying to time this market. It's literally impossible. So if you are a long-term investor in Palantir, the only thing you need to understand is, number one, relax. Everything will be okay. Number two, stay the course. Dollar cost average into the stock slowly according to our system. Our system, which we teach on our Patreon page every single day in our dedicated Palantir room. Patreon.com/Tom Nash. 5,000 members and counting. And honestly, the system is quite simple. You look at the 52-week high for Palantir. Now it's at almost $20. You generate an imaginary line 10% below that, which is in this case $18 per share. Now, if Palantir's $18 per share threshold, which is the 10% below the 52-week high, is crossed and Palantir is trading above $18 per share, this is the normal dollar cost average for the share. If Palantir's threshold gets crossed towards the bottom, which means $18 and below, then this is the double down time. This is the time where you take your money and your DCA pace increases in order for you to create a weighted average in your cost basis in the stock, which is much lower than the eventual stock price in 2 or 3 years. Now, this system is very simple. It works on discipline, on process, on system, on self-control, on removing emotions from investing. And the way it works is quite simple. All you do is constantly buy the stock that you like. You make a budget. Every month, you decide how much you have to allocate for the stock market. You allocate in between the different stocks that you have in your portfolio and you want to invest in. And you invest 70% of that money every single month. 30% goes down as dry powder for those double down times. Double down times comes in. You start doubling down on the stocks that are below the threshold line. Currently, Palantir is obviously above its threshold line. That means I'm buying, but I'm buying normally. I'm not doubling down. We're going to keep an eye on this stock. And if indeed earnings are not perfect and it does pull back below $18, we're going to start doubling down. Very, very simple. Now, if you want to participate in the conversation, you want to join our 5,000 member Discord, our Palantir room, our academy, all of this is available on our Patreon page, patreon.com/Tom Nash. You guys have been killing it recently with so many new members. I'm excited. Our first Zoom call of the week is today at 3:35 p.m. Eastern Time, 8:35 p.m. UK time. Would love to see you there. Thank you so much. And remember, stay cool, stay relaxed, stay frothy. I'll see you in the next video.